This lecture, let's talk about the best risk to reward ratio you can implement in your trading. Now, without wasting much of your time, let's get straight to what we have to do for today. The best risk to reward ratio you can implement in your trading all depends on you as the individual. There are certain criteria you need to put into consideration before you say this is the best risk to reward ratio or this is not. Now, starting from your strategy, you must have tested your strategy for the longest period of time and know what actually works for you. Okay, and the next thing you need to implement or put into consideration is you as that individual trading, your contentment. What are you actually contented with? Now, if your contentment actually meets up with your strategy, then you can come up with the best risk to reward ratio to implement in your trading. Now, the first thing you need to do is your strategy. Then you come in with your contentment. Now, with your strategy, for me, I like to use the 15-minute time frame in most cases. Now, not as if I don't do a full-time analysis, but the 15-minute time frame is kind of suitable for me. So let's say I have this area as my order block, so I'm going to be mapping out this area as the 15-minute time frame order block. So I'll write it in this manner. So the next thing I want to do is to head over to the 3-minute time frame. Okay, now once I head over to the 3-minute time frame, I'll be looking for a bunch of stuffs in the 3-minute time frame to make my conclusion. Okay, now remember, I have my own strategy, the way I want to enter my own trade and so on and so forth. Let's say we have this right now. I want to see a flip zone. So if you are conversant with my strategy, you should know that I use the flip zone and I don't use the controversial or the traditional order block standard of entering. Okay, so I like to use the flip zone. Let's say we have something like this. I like to do 1-to-1 ratio this way. Now, I'm not saying trades cannot go higher than this. Of course, if you had wanted to take 3-to-1, you would have seen 3-to-1, but there are certain things you need to implement to get 3-to-1 now, and those things I'm going to let you know in this video. Now, to get higher risk to reward ratio, the first thing you need to implement is looking at that trade in an higher time frame and making sure that when going down to the lower time frame, the structure alignment is correlating together. Okay, I don't know if you get what I'm telling you. Now, the first thing you need to do is to look at these things on the higher time frame. Let's say for me, you want to look at these things on the 4-hour time frame first and foremost. Let's say the 4-hour time frame. Okay, so you look at it on the 4-hour time frame. You look at the trend. So on the 4-hour time frame, we are bearish. Okay, so we are having a bearish structure on the 4-hour time frame. We're having something in this manner. We have this high here, we came down, we have this high here, then we came down. So we're having a bearish structure. Okay, now you're gonna wait for a reversal. Like I said, to get that reversal, I always say this, the first thing you need to do is to get your reversal, is to take this and map out the last candle, which is this. So once you map out that last candle, you want to see 3 candles above it, which is 1, 2, 3. So once you've gotten that reversal, now you know this is the low of your 4 hours. I'm coming. So this is the low of your 4 hours. So you're going to map it out this way. You're going to say 4-hour time frame low and 4-hour time frame high. Okay, so once you get your 4-hour time frame low and 4-hour time frame high, then the next thing you want to do is to use your Fibonacci tools and get your zones. All right, now having done that, you rule out this as your zone. Now, what are you going to do with this 4-hour time frame? So we use this as the 4-hour OB, yeah, and we use this, that is order block, and we use this second one. So what are you going to do with this reversal strategy? You're going to target what? you're going to target this higher time frame order block area. Remember, we're in a sell, so we expect market once it gets to this area to sell, even if it's a little. So like you see here, or you've seen here, you see that little sell before heading over to this area, and we are expecting a sell again at this area probably next week. Okay, now this is what you are expecting in a real sense, and you expect it to either break this place or probably do a little sell, then reverse to these higher areas again. So that is basically what you're expecting the market to print out, okay, in a real sense. Now, how do you approach this to get the higher time frame? I told you that different way you can do it. You can head over straight to the lower time frame to get reversals of the market, starting from here. Okay, remember, you need to map out your higher time frame to know where you are headed over, okay, or you are headed for. You need to map out that to know where you are headed for, first and foremost. So we are headed to take profit at this level. We're headed to take profit at this level. So we're looking at this. Okay, we could just look at this lower time frame here. Now we see this nice area. Okay, so we can map out this nice area and look for opportunities. Now there are certain ways we could do this. We could just say we're looking for opportunities to sell directly. Now if we're looking at it from this 15-minute end, now means we're going to be placing this, and I don't think that is going to meet up to that 3-to-1. I don't think that is going to meet up to that 3-to-1 level, okay, that you want to take, or higher risk to reward. So this can actually give you, let's say, 1-to-4 or something. Okay, so you need to put your stop loss slightly below this way, and in most cases this is what is going to give you. Looking at this in this era, like I told you, you need a lot of things to conclude your risk to reward, like your strategy and all. So if you are using this strategy, which leaves you with a lot of pips as the stop loss and a lot of pips as the take profit, this can only, you know, put you in a condition where you take 1 to something ratio. But now if you are looking at other controversial means, you know, to get to this end, then you need to swipe into a much more lower time frame, like let's say 5 minutes, after peak pointing the 15-minute areas. Okay, so you need to look at maybe 5-minute time frame and look for opportunities that can actually take you to that that 4-hour time frame order block. Now the disadvantage and advantage of doing it this way: one thing is that you can easily get liquidated and or get kicked out of the market. Let me just say get kicked out. Liquidation depends on how much you have, so you can actually get kicked out of the market before heading to that side. So that is the only disadvantage. Why in the other place it gives you a lot of breathing space and so on and so forth. So but this actually works very well because I have tested it a lot of times. So this actually works very well, and you can actually do both. It all depends on you. So you can have a longer one and a shorter one as well. So let's look at this one. Like I said, let's see. One, we have this fake out, then we have one, we have this again, 1, 2, 3. Now if we're looking for the third one coming down, 1, 2, we had this fake out, 1, 2, 1, 2, 3. Now if we're looking at this now, we would see that this flip zone did not go well. Like what I told you earlier, that you can get kicked out of the market, then it comes down a little before going to that way, because the initial swing low is supposed to be here. So that is the disadvantage of this one. But for someone that does 3-to-1 ratio, let's say you are planning to take target here, which is more than even 3-to-1, this is like 9, you might just get a little loss. Okay, so you might just get a little loss from this trade, then you head over to this one, then this one did not play out well, then you had prices coming down, you had 1, 2, fake out 3. So we'll be waiting for that reversal. You can see this reversal at this area here. You can see this area nicely done. Okay, so let's see if this area actually takes us so let's see if this area actually takes us to our intent direction, okay, or our location, any which of them you want to call it. Okay, now let's see this. let's see this right now. Now looking at this right now, putting your stop loss slightly below here and targeting this region. You're targeting this region. You can see that this did not make up to the 3-to-1 ratio. Okay, let's say you want to take it inside a little bit, then you'd have gotten 3-to-1 ratio on this one. Okay, now this took a lot of time because you were targeting a much more higher time frame. Okay, so this took a lot of time. Okay, now remember the other one, your stop loss would be somewhere here, but this one, it's just slightly below. Like I told you, the disadvantage with this strategy is that you could get kicked out of the market. So manage your risks well. If you want to do something like this, look at this one, it got you kicked out of the market before getting this one. But notwithstanding, a 9, let's say you are doing 9-to-1, which is fine. You are doing 9-to-1 means you're targeting 9 and you are willing to lose 1. Let's say for each 1 ratio you have $1 to risk. Okay, so this would have just taken you out for just $1. Okay, you just lose $1 on this trade, and with this you get 3. So if you minus the $1 you lost here, so you had extra 2 with this. Now unlike this other one that I told you, taking it from this area right now, if you are taking it from this area right now, that will be leaving you with, let's say, 1-to-1 ratio or something, because the area is somehow big. Okay, the area is somehow big, so this will be leaving you with just 1-to-1 ratio. All right, so let's say this, you want to do this, this will be leaving you with this. Okay, now you're targeting the inside of this. You can see it's 1 ratio or probably 1-to-4 ratio. Okay, so this is all the things you need to consider. So you need to look at your strategy, like as seen right now. You can see that I showed you a strategy that you can use a 4-hour time frame and a 15 minutes time frame. You can also step that 15 minutes time frame to a much more lower time frame and execute that trade. The only disadvantage there is that the first one you might take might kick you out, the second one might actually kick you out, but the third one might now go. Okay, since you know that it's going to get to that place in some cases. So all you need to do is what? To manage your risks, to be able to what? Accommodate the whole trade you are going to be taking using that strategy. Now that brings us to the conclusion. What is the best risk to reward ratio? The best risk to reward ratio is what actually works for you after you've tested this thing for a long period of time. So if you know how to take your 3-to-1 ratio like I explained right now, or you know how to take 9-to-1, 7-to-1, whichever ones you know how to take, just make sure you've tested it and you are contented with what you are doing and you are willing to risk what you have risked. Okay, so that leaves us with the end of today's lecture. See you guys next week.